Wall Street surges in a volatile session as inflation shows signs of easing. The Nasdaq closes its best quarter since December 2020, higher by over 16%. Stocks in the Asia-Pacific open mixed. The SGX Nifty indicates a positive start for the Indian market. OPEC Plus oil producers announced surprise production cuts of 1.16 million barrels a day. Crude prices surge in early trade, up 5% to over $84 a barrel. The two-day Monetary Policy Committee begins today in the backdrop of a banking crisis in the U.S. and Europe and some moderation in the Fed's hawkishness. A CNBC-TV18 poll expects the RBI to raise rates by 25 basis points on the 6th of April. And Maruti's March sales beat expectations while it also logs in its highest ever annual sales. Hero Motors March beats expectations while a weakness in exports hits TVS's numbers, while Tata Motors delivers 4% year-over-year growth in passenger vehicle sales. The Maharashtra Electricity Regulatory Commission hikes power tariffs, bills to rise by 5 to 10% for residencies effective on the 1st of April, while rates for industrial use are now higher by up to 15%. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top stories that we have for you as we get into this very short trading week. Remember, this is a week where we have two trading holidays. That's tomorrow and on Friday. And on Friday, most global markets will also be shut, since it is a Good Friday holiday. So very short trading week, but we have lots to track, ahead of that. So let's take you through everything that we're looking at as far as the global markets go. We have very limited markets in Asia trading. So you have the Taiwan market, which is shut, but you also have Shanghai, which is shut today. Hang Seng to start off actually has seen quite a slip because it was holding well in the green for a better part of early trade, and now it's around 70 points lower. The Nikkei market's around 0.4% in the green, so that one is looking quite all right. Straits trading with a gain of 0.7%. So that's what you really have across Asia, looking very mixed and no big direction coming through from there. The SGX Nifty will be up for you. It is indicating a positive start for now for our own markets, and this is after the solid rally that we saw on Friday. We were 1.6% higher on Friday, and now we do get a 40-point uptick. So that's what's going on across Asia. But let's also talk about the U.S. now, because Wall Street ended Friday's trading session higher as the Fed's inflation gauge showed signs of cooling inflation. The Dow closed with a whopping gain of 415 points. The S&P 500 closed 1.4% higher, and the tech-heavy Nasdaq also closed with a gain of 208 points. So all three major indices jumped more than 3% on a weekly basis for the month. The Dow, remember, like we were telling you, jumped 1.9%. The S&P 500 closed 3.5% higher, while the Nasdaq added 6.7%. So that was clearly the best performing index. It was also the best quarterly performance since 2020 for the Nasdaq. And if you look at it for the quarter, the Nasdaq is up almost 17%. That's the kind of up move that we've seen. Of course, remember that this is also the space which had come in for the biggest cut earlier, but it has recovered a bunch of those losses now. The S&P 500 finished the quarter around 7% in the green, while the Dow ended the period with a 0.4% increase. That's really how the U.S. markets fared for Friday's trading session as well as for the quarter. But staying with the U.S., the core personal consumption expenditures price index for the month of February, this is a closely tracked number. The core PCE has shown a slight increase of 0.3%. So CNBC's Steve Leisman is here to break down all of the numbers and what they really mean for us.
PCE price index, a little hotter on the it looks like the headline is 5%. That is down actually from 5.3 on the headline. Core PCE index of 0.3%. That's a little less than expected. How about that for February? January was 0.5, so that was revised down. It looks like from the 0.6 that was there originally. Overall PCE price index 0.3%. I don't see the year over year there. Let's see. Real consumer spending, minus 0.1%. That's a big miss. That was supposed to be up 0.2. We're supposed to be 0.3%. And I'm looking for the income number. Savings rate is, let's see what the savings rate is. I can get that. It's, 4.6 versus 4.4, so that went up. Let's see, one more thing here, if I can find the spending number. There it is, minus 0.1 versus January plus 1.5, so that came down quite a bit. The idea on this whole story here, First of all, big numbers on income and spending in the month of January. They came down a bit, but it's still going to be good for GDP because we sort of rose to that level and more or less kept that level. So to the extent that it didn't give back all of the January gains, it's still going to be on tap for a decent GDP number. And it looks to me like the inflation numbers are a little bit better than expected, although still high. So the Fed still has a problem here. It's got a banking industry that's got some problems out there that might lead it otherwise, or made it to think otherwise it ought to be relaxing on rates, but it has an inflation problem that's still pretty high.
All right, inflation problem that's still pretty high, and then you get this core PCE number. Steve, thanks a lot for breaking down all of that for us. But staying with Wall Street, let's also bring you some important commentary. This comes in from New York Fed President John Williams, who said that inflation remains a top concern and that he's carefully watching credit conditions in the wake of the banking turmoil in the U.S. Williams said that he expects inflation to decline to around 3.25% this year before then moving closer to the Fed's goal in the next 2 years. So that's some important commentary that we got from the New York Fed president. But with that, let's also listen in to David Zervos, who's chief market strategist at Jefferies, as he speaks on the rally that we saw in the U.S. markets. So let's listen into that.
I think that the more the market rallies up, and I've said this year, and it was even part of our thesis last year, the more the market rallies up, the more the market has confidence, the more that Jay Powell and his friends around the board table at 20th and Constitution are going to feel emboldened to be able to get inflation back to 2% faster. And I think the more we see this 4,300 S&P, the more it's going to feel like Jackson Hole last year when Jay sort of changed the speech all around at the last minute and said, hey guys, if you're that optimistic, that means I can just go a little harder and a little faster. Now he's further down the road, and I don't think he needs to go that much further, but I think it just gives the Fed that much more reason to stay on the more aggressive side of the monetary tightening equation. I think this Fed is not going to declare victory early. And the more we rise up, the more they're going to be emboldened to stay tighter for longer. So there's really a headwind for the equity market. And it puts me back toward thinking that the senior secured debt markets, which are still a risk-on trade, are just a safer way to play risk-on in an environment where the Fed is really not going to be your friend anytime soon.
All right, that is some important opinion coming in. And with that, let's bring you the final update on our global market wrap this morning. European markets ended Friday's trading session higher. So the French CAC index was up around 60 points, like you can see, 0.8% higher there. The DAX saw a 100-point gain, and the British FTSE saw just a minor uptick around 12 points in the green to end the session. Headline inflation in the Eurozone fell sharply to come in at 6.9% in March. This is versus the 8.5% that we got in February. So that's the key data point that came out. And the main reason for that was that we saw a big drop in energy costs, right? This is something we have been discussing as well. However, other parts of the inflation basket remain stubbornly high, with food prices contributing the most to overall inflation reading. Separately, we also got reports from Switzerland that suggest that UBS is likely to cut its workforce by 20 to 30% after completing the takeover of Credit Suisse. So that's something important to track as well. This comes in as Swiss prosecutors begin gathering evidence as part of a possible criminal investigation in the deal. So we are, of course, going to keep you up to speed with the story. It is developing, and we will bring you everything that we can pick up on this as the days go by. But with that, let's also move on and talk about how all of these overnight cues really impact our own markets, the individual domestic cues that you should track as well. Remember, we got a solid rally to end the financial year on Friday. We were up 1.6%. So we have our research team here joining us to take us through the trade setup this morning. Nigel, Vivek and Surbhi all join me now to take you through the trade setup. Guys, a very good morning to all of you. Vivek, let me come to you first. First trading day of the new financial year. Take us through everything we should watch.
Well, absolutely, and we're going to start off the fresh or FY24 on a very mixed note. So the first day of the April series, we actually saw a very solid rally. And now when you're talking about the overnight cues, it's extremely mixed. Friday, U.S. markets, as you mentioned, actually gave a very solid close. Nasdaq saw the best quarter since 2020. And also all three of the U.S. indices gained over 3% just in the last week. European markets also all managed to end the day with solid gains. However, the joker in the pack today morning is going to be crude oil prices. Crude oil prices have surged significantly in the morning session on the back of the surprise cut by OPEC, and that again will be a dampener as far as the bull rally is concerned. But quite a lot of cues to watch in terms of news flow this particular week. Number one, is going to be the all-important RBI MPC meet outcome. Also, there is going to be reaction to the monthly auto sales. Also, an IPO, after a while, we are seeing an IPO come in. So Avalon, which is looking to raise close to 865 crore, managed to raise almost 390 crore via the anchor investment route. Watch out for that one as well. Quarterly update from corporates, quite a few numbers coming in, over the weekend as far as Q4 as well as FY23 is concerned. Asian markets have, however, started off on a back foot. SGX Nifty 2 is indicating a mild or a muted start to our own markets today.
All right, Vivek, thanks a lot for taking us through all of those cues that we should watch. But let's also talk about the individual stocks which could be in focus in today's trading session. Surbhi is here with that entire list. Hi, Surbhi.
Hi, good morning. A whole host of stock cues that have come over the weekend. Let's start with the auto stocks first. They have reported their monthly numbers, where Hero Motor, their total sales were up 15% on a year-on-year basis. Eicher Motor, their Royal Enfield sales were up 7% at close to 72,200 units. Tata Motors, their total sales were up 2% at 90,900 units. Maruti, the company has posted its highest ever total annual sales of 19.6 lakh units for FY23. Other stocks that may react to their monthly numbers is Escorts Kubota, SML Isuzu and VST Tillers. Moving on to CSB Bank, they have reported their Q4 business updates. Their deposits were up 21% on a year-on-year basis and 8% sequentially. Their CASA was up 16% on a year-on-year basis and close to 11% sequentially. Karnataka Bank, they also have reported their Q4 business update. Their loan book has shrunk on a sequential basis and the deposits are up close to 9% on a year-on-year basis and 3% sequentially. Hindustan Aeronautics, they have reported their highest ever revenues for FY23 of 26,500 crores. BEL, they also reported a sales growth of 15% for FY23 at 300 crores. Their order book for as on April 1st is around 60,500 crores. And lastly, gas stocks will also be in focus as government has kept the APM gas price unchanged at $8.57 per MMBTU till further order.
All right, Surbhi, thanks a lot for that entire list of stocks. That is many to track, and also the entire crude impact, right? Because we saw a 5% jump in crude prices from $79 to $84. So that will definitely play out as well. But let's also talk about cues from the futures and options space. And Nigel is standing by with exactly that. Good morning, Nigel.
Well, morning, Pavitra. On Friday's trading session, it was a good one, right? And there was clearly some bout of short covering that did take place. So on the Nifty Bank, we had the index surging up and the open interest was down by close to around 2%. And on the Nifty as well, the open interest was down by close to around 4.5% odd. So that's clearly telling you there was a bit of short covering that did play out. But it wasn't from the FIs. In fact, the FIs added close to around 4,000 long positions, but no signs yet of short covering out there. The short positions, well, they are at around that 89% odd. Remember, a couple of sessions ago, it was at around 92% odd. So we're still waiting to see whether or not they cover some shorts. But the good point is they added some long positions at least. On the option side, well, they bought more puts than calls. So that's telling you there is protection on the downside. But what's giving you some hope that maybe, the markets can trend higher from here. In an uptrending market, you'd like to see more put writing than call writing. And that's precisely what happened in Friday's trading session. A couple of strikes that were very active. 17,300 put, 17,200 put. Extremely active out there. More than a crore shares getting added at both those two strikes. So that's giving you a sense that maybe there is support at lower levels. While a bit of a punt being taken on the call side. 17,600 calls suddenly opened up. Premium out there 10 to around 15 rupees. So let's see whether or not they make any money because you have just two sessions. On Wednesday, you'll have expiry that will play out. Crucial levels to track on the downside, the 20 DMA becomes very, very important going by the put writing. So around 17,200, 17,150 to 17,200, that will be important to hold out. While on the upside, the 200 DMA closer to around 17,500. Do the bulls have enough to get past that mark? Well, time will tell. For the time being, the SGX Nifty suggesting that we start off a little bit in the green, 30, 35 points higher. Back to you.
All right, we can expect a green start once again to start this financial year. Nigel, thanks a lot for taking us through all of those cues. With that, it is time for our first short break on this show. But when we come back, we're going to get you a complete roundup of the March auto sales numbers that we have so far. So stay tuned. Welcome back. You're still tuned into Power Breakfast here on CNBC-TV18, and the 4-day G20 Sherpas track meeting was held in Kerala. And from the sidelines, my colleague Ritu caught up with Amitabh Kant, India's G20 Sherpa, on a whole host of issues, including the geopolitical divide and the foreign ministers' meeting over the Bali Declaration. So let's listen in to that conversation.
Everybody realizes that this is a critical moment. And G20 must seize this opportunity to be ambitious and action-oriented, as the Prime Minister has said. And we must be very decisive. That is very clear as far as economic action is concerned. That's number one. Number two is there is a very strong feeling that emerging markets have been impacted by policies across. I think there's a very clear perspective that everybody needs to be together in this, and that G20 unanimously must voice this. There is a challenge of geopolitics, and everybody feels that we should bring countries around and agree and push this bold and ambitious agenda forward.
Like you said, this is coming at a difficult time, India's presidency, because of what's going on around the world, and there's a very clear divide between G7 countries, and then you have Russia and China on the other side. Would you say the discussions have been fruitful? Because the idea of the Sherpa track really is to form the basis for the leaders' declaration later in September.
The talks have been very, very positive, very constructive. I think differences were just wished away, and everybody sat together and discussed in a very, very relaxed manner all issues.
Given that, in the foreign ministers' meeting, in the central bank and finance ministers' meeting in Bengaluru earlier, we could not come out with a communique. There was a chair statement, widely because of these political differences over Ukraine. Now, G20 is not a political platform, but unfortunately the issue has been dominating. You sound quite positive about the meeting so far. Are you hopeful, that we'll come out with a communique at the end of it later in September?
The foreign ministers' meeting, we tried our best. The time was very short. So we built the basis for that in the Sherpa meeting. In Bali also it was done at the Sherpa level. There's a challenge, but I think the Sherpas will have to rise to the occasion. So we've built the base for it. We'll discuss this again for the third Sherpa meeting, and we are very hopeful, at least I'm very hopeful, that India should be able to bring everybody together in the interest of the world. That's number one. Number two, the war is not our creation. We can be very ambitious about everything else, but the geopolitics in Europe is not our creation.
But India has a delicate role to play, given its relations with Russia and the Western nations.
Absolutely. And we are playing that role. We are playing that role to the best of our ability, and we will play this role.
All right, that is Amitabh Kant saying that India is playing its role to the best of its ability, also saying the talks on the entire geopolitical situation have been quite positive and differences were pushed aside in order to discuss this larger issue. But with that, let's also talk about some specific cues now. Like we were telling you, auto stocks are likely to be in focus today, as we did get the sales numbers for the month of March over the weekend. So Sonia is here with a quick recap of all of the highlights. Sonia, how's it looking?
Well, it is a mixed bag for the auto sector in the month of March. The good part is a lot of the companies where we, expected to see a slowdown have actually seen a bit of a recovery in this month. So let me start with Maruti, where the March sales were better than what the street was expecting. In fact, the company has recorded in the fiscal year FY23 highest sales both on an overall basis as well as on the export side. So this is the highest ever annual sales that Maruti has recorded in FY23 at 19.66 lakhs. If you look at it on a monthly basis, it was a flat performance, but that was largely because, the domestic sales were under pressure, down about 2.7%, but export sales were good, up almost 13.5%. Even Hero MotoCorp's numbers, we were expecting it to be a weak showing because of the rural slowdown, but it was not bad at all. Sales better than expected at 5.19 lakh units. That's a growth of 15.5% that we've seen for Hero MotoCorp. Domestic sales growth was good, 21% gain is what we've seen for Hero, while exports were under a bit of pressure, but exports is a very small portion for Hero MotoCorp. Eicher Motors as well, the Volvo Eicher commercial vehicle numbers looked quite good actually. 35% growth is what we've seen there, but Royal Enfield growth has been in low single digits. In fact, talking about low single digits, a lot of the two-wheeler exporters were under pressure. TVS Motor, a case in point, where exports dragged down the overall sales. Overall sales growth was just 3%, while the two-wheeler exports were down almost 46% for TVS Motor. And finally, on Tata Motors, low single-digit growth again over there. For Tata Motors, actually, both passenger vehicles and commercial vehicles did not grow this time around. So commercial vehicle sales were actually down 0.5%, while passenger vehicle sales were up just about 4%, including electric vehicles. So that's, quite peculiar for Tata Motors. Perhaps you could expect the stock to be in the red today. So all in all, you'd have to say it was a bit of a mixed bag in the month of March.
All right, Sonia, thanks a lot for taking us through all of the highlights of how the auto sales figures have looked for this month. But with that, it is time for another short break. On the other side, we'll get you cues from the commodity markets. It's a lot about oil this morning. So we'll take you through all of the details when we come back. Welcome back. You're still watching Power Breakfast, and let's talk about the commodity space now. Manisha joins us with an update. Manisha, 5% jump in crude.
Oh, well, yes, and doesn't come as a surprise because yesterday evening after the OPEC and allies meeting got over and they decided to cut production of 1.16 million barrels per day, giving exact quota on how much each country was going to produce from April onwards. I mean, this was basically coming. So nearly 5 to 6% of a jump up in Asian markets is what we are looking at with crude oil prices. If you thought inflation was going down, well, this is your reality check on that. Prices now are trading at a 1-month high. And, the total volume cut now with the OPEC and allies stand at 3.6 million barrels, which is, by the way, 3.7% of the global demand. And not just OPEC and allies. Remember, we've been looking at crude oil prices for the last 2 weeks, constantly gaining. And that is because the U.S. inflation has been slowing. The China demand is rebounding. There is almost 400,000 barrels per day of export also halted from Turkey. And then the markets also are looking at the weakness in U.S. dollar, risk appetite, which has led to other commodities and equities also lead to buying. So this looks like a very strong chart right now, with Goldman Sachs now saying that $95 of an average is what they see in this year and $100 of an average in the next year as well. So suddenly these markets have gotten very, very bullish.
Oh, absolutely. $95 and $100 barrel, dollars per barrel estimate for crude prices. That's a big jump from where we are right now as well. But something else that we're tracking is that the Neeta Mukesh Ambani Cultural Center was inaugurated on Friday in Mumbai. It is India's first of its kind multidisciplinary cultural space as it showcases India's finest offerings in music, theatre, fine arts and crafts. Now, several Bollywood and Hollywood celebrities, along with other dignitaries, were in attendance at the two-day grand event. Here are some glimpses of the mega event.
Welcome to what we hope will become India's finest platform to present our culture in all its diversity and depth. A home to art and culture in all its forms.
For Mukesh and me, the NMACC is a dream come true. For a long time, we had nurtured a dream that India should have a world-class cultural center.